Good afternoon. Time to check in on the markets. Asian markets lower this morning, and it's the usual concerns around global recession and also higher restrictive monetary policy. But there are also concerns around financial stability, with investors keeping a close eye on UK bonds. Now that the Bank of England's buying spree is over, we had Bank of England Governor Andrew Bailey saying at the weekend that interest rates will have to rise higher than previously thought. Meanwhile, investors are keeping an eye on US earnings season. Locally, we had property and memorial parks developer Calgro M3 noting that they've seen an uptick in the residential property segment. However, they are seeing a little bit of strain, and they did suffer a setback when it comes to their memorial parks. We also had Murray and Roberts issuing a cautionary indicating that they are predicting a 100% drop in interim earnings. That share price down about 33 to 35%. We're also keeping an eye on what's happening with regards to some of the issues that they brought forward regarding margin pressure as well as working capital requirements. They are experiencing a bit of a tough time with regards to project completion. However, to talk to us about what is happening from a markets perspective and also what we can expect going into the week, we are joined by Michael Traherne from Vestec Asset Management. Michael, thank you so much for your time. Given everything that we're seeing with Asian markets as well as the developments we're seeing from a European side, what's driving our local JSE?
Afternoon, Nastasia. It's good to see green on my screen this afternoon. After a very volatile week that we saw last week, particularly on Friday, where markets were heavily in the red. It looks like we're in for a relief rally today, but the overall drivers for the week ahead most definitely will be US earnings and how those companies' respective managements see things panning out over the next 6 months or so.
Dollar strength has been probably a theme for most of this year. What are the type of ramifications that we can expect given the fact that we're seeing dollar strength on, suppose let's look at the ramifications when you look at emerging markets as well as some of the developed economies?
Yeah, as currency changes, there's always winners and losers. Generally, the biggest losers with dollar strength at the moment would be anyone who's importing oil. The oil price has remained high, even though the dollar's been strong. Normally, there's a bit of an inverse relationship there, where a strong dollar is offset by a weakening oil price. We haven't seen that, and that's pushing inflation really, really high in most countries. On the upside, strong dollar generally means that US companies and US consumers have more money to spend globally. So if anyone's exporting goods to the US, it's looking pretty good because their stuff gets cheaper and cheaper as you sell into the dollar strength to a consumer there that's still looking pretty strong.
I did mention to you, the viewers, in my intro that investors are keeping a close eye on US earnings season, and we had that kickoff on Friday. When you look at the overall, US banks earnings picture, what were the key takeaways for you?
So far, not many surprises, bit of a mixed picture, which I suppose is to be expected. But generally speaking, high interest rates have been really good for the banks. High interest rates mean that some of the more dodgy credit clients have seen a lot more pressure. So that will be a theme going forward for the next quarter. And then most of these banks are investment banks as well. And all the uncertainty that we've seen in the globe this year means there's a lot fewer global mergers and acquisitions, and that means that they haven't made nearly as much money this year on investment banking activities as they have last year. So on the one side, interest rates have been good for them, but on the other side, high interest rates have been bad for them. Overall, US bank stocks are heavily down this year in line with markets in general.
What are the biggest pressure points that you see for equities in the short term?
Still very much a US story. Obviously, the war in Ukraine is a concern, but it looks like the global economy is working through that. In the short term, you've got energy supply issues globally, but I suspect once we get through the Northern Hemisphere winter, that will be behind us. But in the short term, in the next month, we've got US elections, we have another US CPI read, and we have a US interest rate from the change from the Fed. And I think those are going to be your three major drivers in the US, and that obviously then spills over to global sentiment. So I think hang on to your hats, it's going to be a bumpy 3 weeks.
On that note then, with the current environment and everyone concerned that the Fed might be going too far, do you then buy stocks?
At Investec, we're not short-term timers. If you have a look at where the Nasdaq is, for example, it's down 35% this year. There's definitely been a lot of pain felt, and I think going forward, we might still see the markets pull back a bit, but more than likely, we're due for a rebound, or at the very least, the bottoming out of the stock market. I'd say in the long term, when we look back to the end of 2022, it's going to look like a buying opportunity. I don't know how long you're going to have to wait for it to look like a good buying opportunity, but I do think if you had money, now looks like a good time. But our general approach is when money's available, get it into the market regularly. If it's monthly, even better, and try to take timing luck out of it. The more money that you commit more regularly, the less risk or the less luck is involved in terms. You're going to win some, you're going to lose some, but on average, you're going to just get a market return.
Michael, thank you so much for your time. That is Michael Traherne from Investec Asset Management, giving us his perspective on the markets and also letting us in on what he thought on the US banks reporting their figures on Friday. That is it from me. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.